So this is a new series called Let's Talk. It's a completely unrehearsed series where I answer random questions that my videographer Patrick tees up for me.
All right, Dusty. I've been looking in the market lately, and I looked through Zillow, Redfin, whatever, and looking, just houses in general to know more about Baldwin County, right?
Right?
I remember in August you had a little reel series that we did together, and you talked about the best investment to invest in right now is
Mm-hmm.
new construction.
Mm-hmm.
And I've noticed the price from new construction and or homes that are built in the 1950s are pretty much in the same price range nowadays, like
Mm-hmm.
350, 400.
Mm-hmm.
Tell me why new construction is a better investment.
Well, we've actually put our money where our mouth is when it comes to that, and we are investing currently in single family new construction in Baldwin County, and I'll tell you why. Um, the there's not one single instance or case that you can go back in the last 10 years where a production builder is building a large neighborhood, and when they start the subdivision, they're selling it for X price. When they finish the subdivision, the last home that sells in there sells for X price. And at the end, the homes are always worth more. Now, I know we've been in an appreciating market for 10 years, and now the market has kind of changed, but I believe it's still going to ring true. If you get in a new construction neighborhood early, by the time they finish, you'll have built in equity. As an investor, you want to play the appreciation game, so that's one way to do it. But also, renters want new construction, right? So they rent for a premium. So you can get a good quality renter for a little bit more rent, and your carrying costs are less. The insurance is less. You're not going to need a new roof, a new HVAC, or a new hot water heater for 10, 15, 20 years. So you're not going to have any large outlays of money in the early stages of owning that property.
So does it matter on what home builder that you're looking for new construction? Does that matter with the price, appreciation?
Um, you know, so if you are a home buyer, a home owner, yeah, it matters a little more, I think, right? You need to be comfortable with your builder, and because there are warranties, and you need to be comfortable with they're going to take care of you from a service standpoint uh, after you close, right? And you want to be comfortable with the subs they're choosing and all that. As an investor, not so much. I don't really care about the builder. I'm more looking at the supply and demand for the product, the supply and demand to rent it, right? So I'm not overly emotional about what builder it is. So I think it's two separate things, but as an investor, it doesn't really matter to me. I'm really looking at supply and demand.
All right. So let's say, all right, so you're looking to get into the investment side, and you're looking to look at new construction. What are some of the best ways to, or what are some of the ways to finance that property if it's your second home?
To finance an investment property? Okay, so there's a couple different ways. There's a couple different loans. So you have, or types of loans. You have your regular conventional investment loan, right? So that is a Fannie Mae or a Freddie Mac product. Those types of loans you can amortize over 30 years. So your payment gets a little bit lower. You're able to cash flow a little bit better. But in most cases, you have to take title in your name, okay? Frank Cole or whatever. So you're not protected by an LLC. You also have commercial lending, right, where you can buy it in an LLC or in a corporation. Um, that's a little bit different. The terms are a little different. It's usually 15 to 20-year amortization. It may have a 5 to 7 year balloon, or it may have like a reprice based on the interest rate, like an ARM loan. So those are some options as an investor that you can look into if you're looking to buy an investment property.
So with all these other loan types, I mean, it's kind of it could be pretty challenging for someone starting off to understand all these loan products and things like that.
Yeah.
What's the best way to get started to start understanding these type of loans and processes?
Well, you need to build out your team of partners, right? You need a well versed realtor, that preferably one who has experience in real estate investing, that you can lean on, and then you need a experienced loan officer, that can articulate, all of your options when it comes to lending. So connect with both of those professionals early on and formulate a plan.
So what's the start on how do you pick that team? Because you are the core five people that's saying
Right.
around you. How did you determine that team of yours?
So okay, so we go all the way back. Back when I started real estate investing, I picked someone that was from here, that knew the area, someone that I knew that I could trust, someone I knew was going to tell me the truth. Right? I just didn't want to be sold a bill of goods. I wanted someone who was going to tell me when it was a bad deal, um, someone that I could learn from. I was really almost looking for like a mentor, for someone to teach me how to real estate invest. He happened to be my realtor before I was licensed. Um, so those are some of the things I was looking for, when I was first started investing.
When did you start real estate investing?
I think it was 2012, when we bought our first property, and the market was obviously way different back then. Um, but we started. Our strategy was, we flipped a property, okay, and we didn't even have cash to do it. We had to finance it, right? So we financed the property and flipped it, right? Made a little money, took that profit and used it as a down payment on a rental. So it was never all long term or all short term gains. It was always a strategy of both, right? The flips are income, basically. They're basically just like ordinary income. The long term rentals are wealth building machines over time. So we did that again. We acquired another flip. We made a little money. We took that profit, down payment on a rental. We did that over and over and over and over again, until we had a portfolio of rentals. And now we flipped 80 to 100, properties. Now we don't own 80 to 100 rentals, so we didn't do it every time, but that's how we did in the beginning. And then early on, when they were so inexpensive back in 2012, what you could do, and you don't always do this because you can't be in debt forever, but they appreciated, right? Then what you could do is refinance and pull out equity and go do it again. Go buy something else,
But you have to
right?
be wise so you're not stressing yourself out on that situation, right?
You definitely have to have wisdom when it comes to that, right? Because the goal has to be to pay off debt eventually. Um, but if you're wise about it and you can use the bank's money to go make money and still have a nice equity position, um, then that's smart to do so. You don't want 20 properties where you're only, at 80% LTV, loan to value. Like that's too much risk. So you want to make sure you have a nice cushion of equity, so if market does change, that you're going to be okay.
So, have you ever found yourself in a tight spot? And if you have, how did you get yourself out of that spot?
Um, we always like to. One of my mentors, Randy Davis, who kind of taught me the basics of real estate investing, taught or told me to always understand the worst case scenario of a deal. Get comfortable in the worst case scenario. If you're comfortable with that, then do the deal. So I've used that throughout, um, and very rarely has that worst case scenario happened. All those properties we flipped, I think we've only lost money on one. So, um, we really haven't been. I mean,
Too reckless or anything like that?
no, we really haven't had any major problems because we've said no a lot too. We're not buying everything, right? So you got to know how to say no also.
So, what are you looking for when you just said that you're not buying everything? I mean, obviously the market was really good, during 2021.
Yep.
Could have bought everything, right? You could have go out and
Could have
bought
sold
everything,
everything too at that time
or could have sold everything.
because it was escalating. Yeah.
So now that idea of like you don't have to buy everything. What are you looking for then?
So a lot of people ask me that are trying to get into real estate investing, and um, I'm looking for the best place to put my money that's safe, where I'm going to. Um, so in flips, what I like, so it's two different things. In flips, what I like is a brick house on a slab, where if if the market changes or I get too far invested, I can rent it, right? Brick houses on the slabs don't have crawl spaces. There's not a lot of problems that can be underneath. It's kind of really simple to understand what your problems could be. You got a roof, you got an HVAC. Um,
Water heater.
yeah, that's about it, right? So if something goes wrong, those are easily rented. Also, the entry level homes, there'll always be demand for. So that lower end is really safe to play in because there's more buyers than there are sellers there always. So we really like those. Not that we haven't done the higher end stuff too. Um, for the long term rentals, um, it's kind of changed. Early on, it was more about I was just trying to buy at a certain price where I could cash flow well. Um, Now I'm more looking for low carrying cost properties with less headache renters that is going to appreciate in good areas.
So when you say low carrying costs, what do you mean by that?
Newer properties,
Okay.
insurance is less on newer properties.
Mm-hmm.
We've bought a few beach properties where we've moved out of older condo buildings into brand new cottages that I think will do better in storms if we have them. Um,
Assessments, things like that, right?
Less risk of large assessments. You're dealing, there's not as many amenities. So I really like those properties, and we really like the single family new homes in South Baldwin County.
So let's talk about the condos. Those are popping up everywhere in Gulf Shores and Orange Beach, and then you have Osprey, you have West End, you have all these cottages. So
Cottages or condos?
those cottages,
Cottages.
yeah.
Okay.
So you say you're moving away from those single condos, and going to like these cottage communities, is what
Right.
you call it.
Yep.
What do you like so much about them?
Um, I think that it's a little bit of following a trend after COVID where the guests like them. Okay, so after COVID, the trend was people didn't want elevators, people didn't want to be around so many people, they wanted to isolate a little bit more. So these cottages became very popular. You can park underneath them, you walk up the stairs, you're in your vacation rental.
Mm.
You go into a 200 unit condo building, you got to go into a parking garage, you got to go stand by the elevators, people everywhere. So they became more popular. Therefore, their rents became higher. Therefore, their values became higher.
Mm.
So, following that trend and understanding that, we started to put our money in the cottages, and they're new. And people just like new stuff. They want to rent. It's got all new furniture. It's attractive online.
Is there any restrictions on how you like design it? How you? Is there any kind of restriction in those cottages?
Most of them, no. You can furnish it however you like or whatever.
So when you said that you saw the trend, what was some of the indicators, and how early did you catch that trend?
Um, I think the developers saw it too. Well, so the developers liked the idea of building these cottages because they're a little bit less risky to build. I may have gone off topic a little. Um,
In saying
yeah.
that, what do you mean less risky to build?
So when you build a 200 unit high rise condominium, that's a huge takeout from a lending perspective, right? And you got to do a certain amount of pre sales for the project to go. And if it doesn't, it's a huge bust, right? It's a huge problem. Um, these cottages are way less risk, right? You buy the land, you build one or two at a time. You don't even have to pre-sell them, right? So it you can get a feel for the demand before you do it. Um, they're just way less risky for
I
developers.
didn't know that. That's
Yep.
interesting.
Yep.
On the development side. So you're looking for long-term investment. You have the cottages. Single family homes that are newer with your clients or your renters would appreciate a safer, better area in a newer house for a little
Mm-hmm.
bit more premium. So that's why you're targeting that. So how long are you like expecting yourself to hold on to these properties? Like what is your time frame when you're thinking about
Yeah, that's a good question. I go back and forth on that. There was a period of time when the market was really escalating. I say we're in 2022, like maybe like quarter two of 2022, when I heavily considered selling, kind of like timing the stock market, because there was that rare moment in time when it was just stupid, right? The prices were just um, high, and then they've held, but they have dipped a little bit. So in that moment of time, I really considered selling, almost like a stock, selling high. Um, but the decision was to hold, right? Where I'm 40 years old. Um, you're going to win. Really, it's a win-win, right? If you invest in real estate, you win.
Right.
But we decided just to hold, and let these things create wealth over time.
Mm.
Yeah.
So, um, so let's say you're owning. So now you're let's say someone they buy their home and they have a renter in there. Cash flow is coming. They're getting
Mm-hmm.
let's say they're netting. What is your what are you looking at on netting? Like what is the percentage?
So that's a good question. So there's a lot of gurus online. There's a lot of podcasts and groups of really smart people who have these calculators of investment. It needs to meet this criteria for you to do the deal. And I think all that's great, but I don't use any of it. I try to find my money has to be invested. It's not going to be in large chunks of cash in my bank. I'm not smart enough to trade stocks. That's not what I know. I know real estate. So I'm constantly just trying to find the best place that I can put my money in real estate. Um, and then I invest and I'm not scared, so, and then I put it there. So that's how I evaluate the deal. I try to find the best place to put my money. That may be a single family house. It may be apartment complex.
So there's not really a percentage that you want back in return.
Not really. I mean, obviously, I don't want negative.
Obviously.
I don't want negative.
Greens makes sense though, right? If it's green, it makes sense essentially.
Yeah, I mean, it's yeah. You want the cash flow, but it depends if there's an appreciation play involved. Also, sometimes there's not. Sometimes this is about all there is. There's the
How do
old.
you determine that?
Well, there's an old school. I mean, this market, the way it did the last 10 years, people got spoiled with appreciation. It used to be as long as the tenant was paying my mortgage, then it was a good investment.
Mm.
Like that was the deal. So there's nothing wrong with buying a property and it really not cash flowing, but your tenant's paying your mortgage.
Right.
That's still a great investment.
Right.
As long as you don't have a lot of other. That's why I like the newer properties. As long as you have a lot of other outlays that may happen.
Do you think the trends with apartments now, as you see condos or apartments, their rent has risen over the last few years?
Yeah.
Do you see that has helped your investment property gain more cash flow?
So inflation has definitely increased rents, and the best way to counteract or hedge against inflation is to have a cash flow business, to be a landlord. Because the more inflation we have, the higher people pay for rents, and it's not like I'm taking advantage of people. That's just a fact, right? I mean, that's just the best hedge against inflation. So the more, yes, the answer is yes, I guess.
Yeah.
Yeah.
So cash flow start coming in, IRS come knocking.
Yep. So obviously, the more money you make, the more taxes you're going to have to pay. But there's this thing called depreciation, and you can depreciate your asset. So no matter what, there's a depreciation schedule. You may not even know it. I think it's like 39 years or something, where if you have a good CPA, they're depreciating at 139th every year. Don't quote me on that. Not a CPA, but you can accelerate that depreciation through something called a cost segregation study. Now you have to have a certain. It has to be the property has to be worth a certain amount, and there's some qualifications on. You have to be like a real estate expert. You have to own certain many properties or be in the real estate field to qualify for that tax law.
Mm.
Um, but if you own outside of that, if you own lots of rental properties, a lot of the things that's a business.
Right.
Okay, so a lot of the expenses that to go with owning rental properties are tax deductions. It can be written off. So you can apply those write-offs to
And
your
obviously, you
taxes.
don't do your own taxes.
No, I have a CPA. Yeah, absolutely not. Uh,
So, you is majority of your the rule is the majority of your investment in your surrounding area, like within like a 50-mile radius, or do you invest in Mobile or
yeah,
Pensacola any?
good question. Everything we've invested in has been here, with the exception of one. Um, I know a lot of people that invest in other markets, and I'm open to that. But it just seems like we invest in what we know, and I think it's because we live in a great area. Like if I lived in, I'm not going to call a terrible city, but if I lived in another city that was not very attractive, then I'd probably be looking maybe in other markets. But our market happens to be one of the best markets to invest in the entire country. So we're blessed that way. So we keep our money here.
So what are you looking for when you say not attractive area? Like what are some
Um,
things that can you think of any?
So yeah, so I mean, why would you want to invest here, right? So people are still discovering it's here. People are moving here. It's where people want to live. It's where people want a vacation. It's growing. So I mean, all those things are positive signs for the economy and for the future, right? You're betting on the future of a marketplace when you put your money there. So you really can't find a better place than Baldwin County.
So that's a good question. So let's go. I guess most people who move, they usually move just for their job or that area is whatever, or they move close to their family, but they're not thinking about the state of the future of that marketplace, the state of the future of that area. Like they don't think about tourism. They don't think about any. For the most part, I'm single on myself. Like you go, oh, this is a cool area, but you're not really thinking about
Right.
development. You're not looking at all that. So what are you when you say a good market or your good
Yep.
development? What are some of the five things you're looking for in that sense?
Yeah, I think
What makes a good market?
so. Population growth. So people are moving in and not out. So that's a good sign. Um, Businesses are coming to town. Corporations are coming to town. Um, Developers are putting their money here. Sometimes you can just follow the money, right? So um, if people smarter than us are spending millions of dollars in this marketplace, they must see something. Um, and then there's just a good future. It's a good place to raise your children. It's a good place to retire. There's good tax laws. Our property taxes are very low. Um, all that, and the people are amazing. The people are friendly. All that, it makes it attractive for people to live here.
Mm. So you see when you're seeing big money, smart money move in,
Hmm.
and you see the prices right now to some people who aren't used to it,
Hmm.
will say it's way too high,
Right.
and they probably will say like the ship has sailed. It's not worth investing in this area. It's already reached the pinnacles of where it is at.
Right.
What would you say to that? Is it too late?
Um, so it just depends on what your expectations are, right? So you have to invest your money somewhere, right? So I mean, like right now, um, you can get good rates in better rates in CDs and some of these short-term bank investments, but um, you just have to adjust your expectations. Are you going to get 20 to 30% appreciation like we did in quarter one or quarter two of last year? Absolutely not. But where else are you going to put your money? So you have to have an understanding of what other options are still available. And you also need to know in real estate, if you look at from 1950 to now, what has it done? Is that good English? What has it done? It's gone up. Now, it may do this, it may go up and down, but the line is up. And it's going to continue to do so. It may come down, it may go up, it may come down, but over time it's going to go up because the value of the American dollar is always going to go down. So, you know, it, it, that's why we continue to invest in real estate.
It's simple math, right?
Yeah.
So, I don't want to keep this running way too long. We're at 30 minutes ish. So, um, I'm bringing this back into the rental property. So, you own a couple. I don't know how many you own. How do you manage all of them?
So we manage them all ourselves. So now we have an assistant that helps us kind of take the money, give the receipts, renew the leases. Um, Heather manages the Airbnbs and the VRBOs in that category. So we manage them ourselves. Now, there are management companies. If we were ever to buy something in another marketplace, we would hire a management company to manage it. But so far, even with the amount we own, we manage them ourselves.
Um, do you feel like how do you handle the? Do you ever feel a tension with owning property and like having renters and stuff, or is this more part of business
What
for
do you
you?
mean?
Like for instance, like you said, like you're a landlord, you're not, your inflation rise up, um, your your rates are going up,
Oh, tension.
yeah, tension, yeah,
Tension.
Tension.
Um, yeah. Yeah. I mean, it's not always pretty, right? I mean, we've had to do some nasty clean outs
Yeah.
where people have trashed our properties.
Mm-hmm.
Um, we've had people not do the right thing when we did the right thing, when we held up our end of the bargain of the lease.
Mm-hmm.
Um, so that's my advice to people that want to be a landlord. Either you're going to be a landlord or don't. Don't do this halfway thing. I'm just going to own one property. To me, get in or don't do it at all. That's my opinion because there will be, in other words, I always get the question. They have the one house. Should I rent it or should I sell it? Well, do you really want to be a landlord? And how upset are you going to be if this tenant you put in there destroys your house and you have to repaint, put all new flooring, and they smoke in there even though they weren't supposed to, and even though you were checking on the property and they weren't supposed to have a dog and they've got a pit bull in there and you got to go clean it all up? Are, are you emotionally going to be able to handle that? If the answer is yes, rent it. But now there are ways to protect yourself from that and minimize the chances of that happening. But if you do this long enough, things like that are going to happen.
How do you protect? So how about this? How do you attract and retain good tenants?
I think that I think people want and appreciate to be treated fairly. Um, the adage, you do me right, I'm going to do you right. This is a partnership, and that's really what the landlord tenant relationship should be. So if you find those type of people, it works really well. When you have a problem and your AC goes out, I'm gonna do it. I'm gonna help you very quickly. So that's my part. Your part is you're gonna keep the property in the condition per the lease, and you're gonna pay on time. So just try to create a partnership, not like you're the landlord way up here and they are the tenant way down here. That doesn't work. That creates animosity. It needs to be a partnership.
Okay.
Yep.
So, real quick, we're gonna land the plane. But what are some common mistakes to avoid when you are investing in real estate? What are some landmarks? What are some precautions that you will have for people who are looking to invest in real estate?
I think that some people think that when they're flipping, they think they're going to make more than they're going to make, right? So their expectations are too high for their return. So either they over improve the property or they don't do the deal at all. So that's one thing I see. The others is they just don't do it. They don't invest. They think that it has to be this perfect investment and it has to check all these boxes and they're too picky where if they would have just bought something a year ago it probably be worth it more than it is, more it probably would have appreciated and they would have had some cash flow and they probably would be getting ready to do it again, but instead they're paralyzed by analyzation. So the biggest mistake I see people make is not acting. You know, and so we were pretty disciplined about what we spent our money on early on when we started making a little money, right? So I found enjoyment in buying a rental property, not a brand new motorcycle.
Right.
So, that's a mistake. They spend all their money on toys when they could be buying assets that's going to create them a lot of wealth. Yeah, if you have any questions about real estate investing, maybe comment below. Maybe we can tailor the next episode based on your questions. We would love to provide you content, answer questions that are valuable and pertinent to you.